Hello guys, happy new year and I wish you the best this year in your forex trading. So today I'm going to be showing you a very basic but very profitable way of trading. Guys, watch this video till the end, and if you are new on here, consider subscribing and like this video. Punch that notification bell so that you are notified whenever I post new content on here, that is weekly. So today in this video, I'm going to be showing you very simple trading strategy, which is very good for beginners and also intermediate traders, and even advanced traders still use these basic methods of trading. This is a very technical way of trading, but it's also very simple. There is no trader on the earth who trades without these basic methods of trading. They are the foundation of technical analysis. Without understanding these basics, you cannot be able to trade. Even without using the other complicated strategies out there, you can be profitable using only this fundamental technical analysis that I'm going to be showing you.
Okay guys, this is the simplest way to trade and it's very profitable. Even for beginners, you can actually use this to start off trading as soon as possible. I'm going to be using this example beginning with the 4-hour time frame. As you know, our technical analysis begins from a higher time frame to a lower time frame. So in this case, we have a 4-hour time frame. So we're going to mark out our support, resistance, and trend lines. That's it. That's all you need to trade. It's as simple as that. And watch your candlestick patterns in lower time frames to make those entries. And that's all you need to trade, guys. Once you master support, resistance, and trend lines, you are good to go, guys. You don't have to complicate your strategies, all right? So you can apply this on any asset, all right? When you are doing the technical analysis, you can see here, the price could not break through several times, you can see, all right? Even you can see these areas, the price could not break through. This break above and the price continued to rally to the upside, creating higher highs and higher lows. But it broke out here. We are going to mark out another area. The area of interest is here. Okay, it was resistance here before the price dropped all the way down here. But now it has turned to support over here. So this is this is a pivot area, okay, where there is both resistance here and then support here at the retest, or an area of resistance and that becomes an area of support. So this is also a very important level. And also there is this that we see right here. Focus on what is happening now. All right, so you can see a bounce off around this point. The reason I'm drawing that pivot area, a pivot is where you have both resistance here. You can see a resistance here previously and the price dropped to this level before breaking above. So you see a resistance here and you see a support over there, all right, forming right here. This is a 4-hour time frame. So now after drawing these areas of value, after marking out these areas of value, it bigger, this would be our support and this is our pivot area. This is a pivot is where you have both resistance and support. Okay, that would be our pivot area. That would be our pivot, and this is also a pivot area. Okay, why? Because we have both resistance and support. So these areas are already marked out and you can see that the trend is clearly upward trend. In an uptrend, you are looking to buy. You are looking for opportunities to buy. And also we have a resistance up here where there is a double top. This is a double top area. Okay, so here you see a double top. This is the first touch, this is the second touch. This is a clear double top, all right? And then the price retraced all the way down, okay? And now currently the price is at this pivot, retesting this previous resistance area here. Okay, and also retesting this previous breakout point. Now the price is over here, so we are focused what is happening right now here, and we are looking for opportunities to buy, guys. We are looking for opportunities at the pivot to buy. So what do? This is the market structure. This is what we see going on. Okay, and if we decided to draw a trend line, we could draw a trend line from this point, okay, to this point. Okay, we are focusing on this, what is happening now, all right, at this point right here. All right, guys, so we are focusing on what's happening there. There's this point, there's that point, and then there is that point. Okay, make sure for a trend line to be strong, it has to touch at least 2 or 3 points, okay, where the price has bounced off of. As you can see, it bounced off here, and it bounced off there, it bounced off there. Okay, so this is the current action we are looking at. So when we go to a lower time frame, we go to our 1 hour time frame to refine our areas of value. It's happening right now at this pivot. Okay, we can also mark out this area here. Okay, all right, so we are looking at this area here. So for this current, because this is a weekend, the market is not open, so what we are focusing on right now is buys above here. We wait for buys above there. Here what we are looking for is a retracement. As easy as that, a retracement to retest these areas, okay, before we can place our buys to the upside. That's what we are looking at right now, because this is a very bullish market. We are looking for buys. All right, so but there is also a possibility of price breaking below this trend line. When the price breaks below this trend line, you are looking for a proper retest here before you can consider selling back. So because this is a bullish market, we are looking at buys only at this point. Okay, opportunities to buy. Okay, now we go to a 15 minutes time frame for our entry. What we are looking at is break above retest of this area before we look for our candlestick patterns, either bullish engulfing candle, 3 white soldiers, or some kind of formation around this point, so that we can buy, all right, when the next week opens. So we will buy around here. But there is also a possibility, as I'd already said, of a break below here. If the price clears this previous low here, okay, then you are looking at a proper retest here, candlestick patterns like bearish engulfing, 3 black crows to the downside, and then your areas of target if you are buying. Okay, right now we are focusing on buying because this market is very much bullish. All right, so when you are going to buy, your target is your next area of value. What's the next area of value in the 15 minutes time frame? When you are going up, the next area of value would be at these levels here. This is the first one you target here. Okay, let me change that to orange. So this would be your first target. Why am I saying this is the first target? Because you can see previously here the reaction here, reaction there, there's a reaction there to the upside. So there seems to be some reaction here, all right, pushing the market upward. So this would be your first area of value that you target as you're going up. So you place your take profit, your first take profit over there. You take your buy around this point, and then you place your stop loss just below this. You place your stop loss just below this this area of value here, which was previously a support inside this structure. Okay, you place your stop loss just below here, and you target this first level here. Okay, and then your second target would be this area here, this one right there. All right, and then your other target would be over here. All right, you don't want to target this level because sometimes price does not really get up here. Okay, so this would be how you target this trade all the way up here. So this would be your first target, and that would be your second target, and that would be your third target.
So to be sure, put your target above support for take profit, a few pips above previous support, and also a few pips below previous resistances. All right,
now again, if the price breaks above here, you wait for the price to break above here, then you wait for a proper retest, and you can continue buying all the way to the upside. Okay, so this is how you would enter this market. All right, this is how you would enter this market. Your stop loss, you always put your stop loss below the area of value. The area of value here is this inside structure. As I've already shown you, there is a support structure inside here. You see here, first touch, second touch, the price resistance to fall below here. So this below here would be a safe place to place your stop loss. Okay, just below here would be a safe place to place your stop loss, below this inner support area. Okay, as simple as this, you can make money, guys. Support, resistance, trend lines, that's all. And your candlestick patterns in lower time frames of 15 minutes to confirm your entry. That's all you need. And there is no professional trader who will say this is not a good strategy. This is what most traders use to actually make money in the market. In case there's a change of character, like in this case, if it breaks below here, that would be a change of character. You look for opportunities to sell all the way to the downside. You'd be looking for opportunities to sell back to this point here, guys. If you choose to only master this, that would be sufficient for you to trade and be successful, as long as you follow exactly your plan, as you have already done the technical analysis.
Wait also for a retest after the bounce off of the trend line or the support or the resistance. You wait for that confirmation in candlestick patterns for you to enter the trade. All right.
So looking at this chart here, of 4-hour time frame, guys, it's a bearish market. So you are looking for sell opportunities. You are looking to sell. So what you are going to do is mark out again your areas of value. You can see you don't want to go way back to the past over here. You want to start closer. All right. So we can see an area of value here. Already I can see this is a resistance area where the price tried to break above here. It could not. It dropped, then tried again here. It could not. Then it tried again here. It could not, and then finally dropped all the way down. So this becomes our resistance area right here. Okay, that we are looking at a downtrend. A downtrend, a clear downtrend, guys. Even if you don't draw a trend line, you can actually see that this is a downtrend over here. When you join those 2 points, that is a clear downtrend from here to here. That's a clear downtrend. Okay, so now we are looking at another area of value right here. Previously, it was a support area. Okay, is that a support? Because price could not break below several times. All right, could not break below here. Now the price currently has broken below, so we are focusing on the now. So already we are seeing this as a bearish market. This Euro USD is very much bearish. So what we are looking at, we are focusing on this area right now, right here. Okay, we can see that the price has broken below the support. The 4-hour support is been broken below, showing that the price is in a downward momentum. What we are looking at right now is a reversal. As you can see, there is a retracement to test this support here and drop even further down, or it could even go and retest this trend line over here before dropping. That is also possible, but this is a bearish market. We are looking for sell opportunities. Okay, so now we go to a 1-hour time frame. So this is a 1-hour time frame. We can still see the same scenario playing out. Okay, so we have already marked out, and you can see there is this area here. I also want to mark out this area, planning to retest this resistance over here. All right, so let's assume the price returns like this and breaks above here. Then you are waiting to buy tentatively to this resistance here. Okay, but right now we are looking at selling. Okay, we are looking at selling. Let me just magnify, make this bigger so that you can see. So below here we are looking at the price bouncing off of this support here and going further down, or that is the scenario number 1. Scenario number 2, it could go up to this trend line and bounce off this trend line and return all the way down, because it's still a bearish market at that point. All right, so when we go to our 15 minutes time frame for our entry, we are looking at this. All right, I'll wait for the price to go bounce off, and then I'll wait off the price to go bounce off here and then return all the way down. When it gives me a confirmation to the downside, the best time to buy is when it breaks below here. If it breaks below here, I'm waiting for that retest and I'm selling all the way down, okay? And something like that. And the second scenario would be the price will go all the way back here and retest, okay? It can go back and retest this trend line over here and start falling again to the downside. This is a scenario number 1, and that would be scenario number 2. This is also possible, right, guys? Okay, so now our target, okay, in case the price gets to this point and begins to drop, okay, when we go back to the daily time frame, then we can mark out from a daily time frame our previous areas of value. This is the last one down here, okay? Then there is this one down here, there is this one here, okay? And then there is that one over there, all right? As the price drops, there is this first one over here, there is this first one over here, okay? So this would be our first target, and that would be our second target, and that would be our third target. As the price continues to drop, we can place our trades to target these levels. All right. So now when we go back to our 15 minutes time frame, okay, is right here. So this would be our first target when we sell. When we sell from this point, we can target all the way down here first. All right. And our stop loss would just be up here above this support right there, okay, to be safe. So we'll place our trade when we get that confirmation to the downside, all right, something like that. So our stop loss will be safe above the area of value. This is the area of value we are looking at, this one here. This is a support from the 4-hour time frame, all right. So we are placing our stop loss just above that support. If the price retests this area and drops back down, gives us a confirmation of black crows or bearish engulfing candle. At this point, we place our trade and target our first area of value, which is this one, okay? And then we can also target this area as our area number 2 for take profit, okay? This one would be our area number 2 for take profit, okay? This one would be our area number 2 for take profit. So this would go, if this continues all the way down, you target this area, and the third point would be right here. This would be our third area to target. This would be our target number 3. So imagine this is a 1:17 risk to reward ratio, roughly. When the price moves 1:1 risk to reward ratio, you always have to break even or move your stop loss into profit, okay, and continue to trail that stop loss. Let me show you how you would trail your stop loss here. This is what you would do when you place your trade. When you press your trade and you see that the price has hit 1:1 risk to reward ratio, let's say this is a 1:1, okay, this is roughly a 1:1 risk to reward ratio, and you are already in profit, you move your stop loss into break even. Break even means you move your stop loss into the price which you sold at right here, so that even if it reverses against you, it takes you out at break even, you are not losing anything. All right. So, and after you continue, as the market goes down, you continue moving your stop loss. Now, when you move your stop loss again, let's say the price has broken below this area of value. It has hit 1 to 2 risk to reward ratio at this point. Okay, at this point it has hit 1 to 2 risk to reward ratio right there, and it breaks below this. When it breaks below this area here, as it is continuing in your favor, all right, you move your stop loss more into more profit. Okay, you move your stop loss into more profit, but not very close to the current price which is running. You move your stop loss. Let's say it has gotten to 1 to 3 risk to reward ratio here. You move your stop loss to a 1 to 2 here, as the price gets to this point over here. Okay, you move your stop loss right there. Okay, so as the price continues to go lower, you are also moving your stop loss more into profit, like to this area. As the price continues to move lower, you're moving also your stop loss closer to the price, but not so close, because you don't want it to take you out easily. Because the market does not move in straight lines, it may be it drops like that. Okay, so you want to place your stop loss above retracements along the way. Okay, all right, so you keep, when the price continues to move lower, you move also your stop loss to this point. Okay, and then when it gets to this point, and then you are out of the trade, because this is the maximum you can go. All right, this is the maximum reasonable area point that this price can drop. All right, so you can continue trailing your stop loss all the way down as you hold it for long term. It can drop for months. Okay, it can drop for weeks to this level here. All right, so that's how you would trail your stop loss all the way down, guys. And for those who are looking for mentorship programs, you can just reach me out on my WhatsApp or send me an email, and let's talk about it. Thank you, guys.